Good morning, everybody. Mike Vacchi, Princetontrader.com, here with your Thursday morning market webcast. Okay, so look, yesterday we talked, let's back up. So you have the second high of the double top on the front month contract going back to September of last year. We started to see some lower highs. You started to see the 9-day, which is the blue line here, which had been really faithful support for the last, call it 20 sessions, start to go resistance, okay? Then you started to see the green line, which is your middle Bollinger Band, do the same. The bands tightened up pretty nicely, Bollinger Band with 2 and change. And what we've done now is we rolled over a little bit. We've started a lower band ride, which we've engaged, and we're in the third day of that. And you can just barely see down here the band starting to peak a little bit, and you can see the expansion a little bit to the downside today. There's plenty of fuel in these bands. I mean, we're in a pretty low volatility environment there for about a month, and the rubber band expands, then it contracts, and we're in the expansion phase. So, as we look at the hourly chart, you see back on Friday, it went up to the pre-FOMC price, $29.50. They gapped it down from there. Took it right back to this week's weekly pivot, $29.37. They killed it there Monday at the close. We got lower highs, and we talked about the bears needing a lower low yesterday. Well, they've got it, so they're progressing to the downside. 28.95 to 2900 got tested multiple times yesterday. It held up as resistance, and we've made lower lows. So what we've done, and we just printed 27.25 versus the 58 that they made in right off the Europe Open last night. So for us, yesterday morning was about a lot of 5 handles and stopped out, 5 handles and stopped out. We did about 8 of those. Then things finally started to open up a little bit. Right now we're short 91. That 95 sealed off. So we're short 91. We've taken some profits. We've rolled stops down. Yesterday is going to end up, 40 plus to go with the 65 from Tuesday, the 22 from Monday. I mean, the month is in excess of 230 handles, which, in band expansion, that's what you get. And it's not from swing trading or overnight trading or anything else. It's just from letting the stuff that wants to work. The thing you have to be careful of in this kind of environment is people hate these types of rides. They will fight them, okay? They'll fight them. They'll add to them. They won't respect risk. So like I said in yesterday's webcast, you've got to use disaster stops. We use 5-handle stop in the room all the time. The worst thing that's ever going to happen to you is a -5. Not yesterday, the day before. We did a -5 on a long in the morning. It wasn't working. That tells us it's not working. This is what we need to do. You make the adjustment, and we end up having a 65 handle day on a trend down. But it's about not being stubborn, not being ideological, respecting risk, putting your stop in place, taking profits where you find it. But listen, longs are counter trend right now. I get the fact that we glided up for these couple of months, and we took advantage of that while it was doing that. Right now, it doesn't want to do that. Right now, it's in band expansion to the downside. Now, will this end? Sure. But while it's going on, I'm going to tell you not to fight price, just like I tell you not to fight price on the upside. So what you've seen here is every key area since Friday that it's hit, it's rejected. Actually, since 61.25. So let's expand this out just a little bit. Now, I won't keep you much longer. There's your double top. Rejected. They do 2,900 support. They crawl it back up to the pre-FOMC price. They gap it down. Lower low. Weekly pivot. Rejected. Lower high. Rejected. Lower. This is not the type of tape that you want to fight. Okay? The bounces will come. Trade the bounces. We've traded the bounces. But have your eye on the exit door and understand that when it stalls out, you need to take profit, figure out where you are, set your risk, and understand that for a period of time that'll end whenever price is ready for it to end, the shorts are paying better than the longs. We've got a big news market. It's a headline minefield market. You've got both sides throwing things at the tape with regard to China and and negotiations and tariffs and whatever is going to happen or not happen on Friday. So you got to be aware of that. Okay, and that's the other reason why, and I mentioned this yesterday. And for those of you that are watching your first webcast with me, welcome. We've been doing these for 5-6 years every day. Knock yourself out. They're all up on YouTube. Yesterday I talked about how to deal with a headline minefield market, and we kind of walked through that. Just understand it's Rumorville, another very good reason to have your stop set. All right. Take care, everybody. Trading well. We'll have some more stuff out on social. Check us out on Instagram. And if you're interested, come check out the room. There's a ton of new people in right now. It's a great time to start. You'll learn along with a whole collection of new people to go with the members that have been around a while. It's a serious place to trade, but a fun place to trade. I love my job. All right. Take care. Trading well. I'll see you tomorrow. Follow us over on Twitter, Instagram, and Snapchat at Princetontrader. Check us out on Facebook and join us for a free trial at www.princetontrader.com. Trade 'em well.